Welcome back. I'm Pratap here. Today is 27th May 2024. In this video, let us evaluate the performance of high liquidity zones, and also we'll look into the opportunities we got in NIFTY and BANKNIFTY also. Even before that, an announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel, click on this community tab, then you will get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. Just click on this link. I'm clicking on this link. Now I get into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills on supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be useful to you. Each time when we release a new YouTube video or any other important updates, we will provide in the Telegram channel. Now let's get into the analysis discussion. Let's start with NIFTY. This is the detailed analysis we did on Sunday about today's trading session. Initially we defined this is the range. This is the high liquidity, 5 minutes high liquidity demand zone, which is fine-tuned inside a normal 15 minutes demand zone. This 5 minutes high liquidity demand zone, we got an entry today. At 10.5 candle, the price has reached near to the zone. Maybe with a small entry buffer, your trade would have been executed. And after that, you would have captured until this 5 minutes supply zone, you would have captured 65 points. But I already explained about trailing stop loss in your lesson 19. If you would have followed trailing stop loss, the 1 minute trailing stop loss, you would have captured even more profit. Why should we follow? Because this is a high liquidity zone. Most of the times, the target will be up to the 15 minute zone, but there is no 15 minutes zone. This is the only one supply zone is available. That means there are higher chances that you may get a new all-time high. So how do you capture the move? So go to the 1 minute time frame. This is the 1 minute time frame. First let me show you in the 5 minutes time frame. This is the 5 minutes demand zone, high liquidity demand zone. And here in this candle, we got the entry today at 10 o'clock candle, 10 o'clock 5 minutes candle, we got the entry here. And then prices moved up. If you would have followed 1 minute's trailing stop loss, now I went to the 1 minute time frame. See, 1 minute's demand zones are violated. You have a drop base rally is there. Again you have rally base rally. You draw this zone. This is a 1 minute demand zone. Probably this could be a 1 minute high liquidity demand zone. Why we are saying 1 minute high liquidity? Maybe multiple times it is taking entry, not only taking entry, here new 1 minute zones are creating at this level. See, drop base rally, again here also a new rally candle. So multiple times it is getting created. That is the reason why it is currently holding the prices. After that, any 1 minute zone is created after this. This is the one, drop base rally. Again rally base rally. Again rally base rally. Again rally base rally, but it holded the prices, slightly pierced, but okay. That is within the entry buffer level. Here rally base rally, here drop base rally, here rally base rally. You draw this zone. Maybe you would have exited, maybe if you added some buffer and still if you maintained, maybe in this here, somewhere here, definitely you would have exited. This is the way you would have captured 150 plus points. 150 plus points, let us say 150, at least definitely 150 points move you would have captured from here to here. Based on the trailing stop loss, you would have exited in this candle, or maybe you would have exited in this candle. So excellent trade we got. Maybe it could be within your stop buffer area, so let us leave, not here. Definitely somewhere here you would have exited. Because stop buffer also triggered the stop loss, and somewhere here definitely you would have captured over 150 points move. So excellent, this is a 5 minutes high liquidity demand zone has given an excellent trade. Why it has given an excellent trade? Because currently market is at bullish. Now at the end of the session at 3 o'clock today, see at 15 minutes candle, 15 hours candle. That is today at afternoon 3 o'clock, just half an hour before closing the trading session. This 15 minutes demand zone has been violated. That way 15 minutes trend is changed to sideways. In sideways you get both a long opportunity as well as a short opportunities you will get. Here you have another 15 minutes demand zone. See, from here it took the support, the long trades probably, but anyway this is during the last minute. If anybody would be holding the prices like DIT traders, maybe would have taken a trade here. But intraday traders, definitely last half an hour you don't trade, so you don't bother about this. But Nifty has given an excellent profit today. But what about Bank Nifty? Bank Nifty reverse happened. Let me go to the 5 minutes time frame. We have a 5 minutes high liquidity zone, and above you have a 15 minutes high liquidity zone. We thought this 15 minutes high liquidity zone will work as a bull trap, but that didn't happen. Institutions did not show any interest. Maybe because the current market is bullish market, probably that could be one reason. Institutions did not bother about this zone, so easily this zone is violated. What about this 5 minutes high liquidity zone? And moreover, this 5 minutes high liquidity supply zone is the responsible for this entire daily high liquidity supply zone, because the daily zone picked up the orders from this 5 minutes and pushed to the prices. Definitely there will be a strong order flow. Yes, there is a strong order flow. That's why you see after reaching the prices were down, but it is not good enough to enter into our 15 minutes target. Here, somewhere here our 15 minutes target will be there. Changing the time frame to 15 minutes. See here, somewhere here you have a rally candle, maybe a leg-in candle, or maybe you can consider this as a leg candle. ERC candle, you have a base candle, and then you have a rally candle. So definitely you expect. But what happened? The move is very small. Prices went deep, came down. It is not good enough. The reason is institutions created again a drop base rally and pushed the prices up. Finally this zone is violated. If you go to 5 minutes time frame, only till the next 5 minute zone only prices reached. Rally base rally is the next 5 minute zone. And you can't, 5 minute zone you can't take the trade because RR is not there. People will avoid. But 15 minutes target definitely we expect you would have taken a trade, but you didn't get the profit. That way your trade would have been stopped out. Bank Nifty traders, definitely it is a bad day. Your trade is stopped out, and if anybody would have taken this is the bull trap, thinking this bull trap will work, but easily this is violated. Maybe institutions did not show any interest at all on this zone. So whoever is thinking this is the bull trap and planning our trades, even I thought this is a bull trap, right? But institutions didn't care about this zone today. Easily the zone is violated. When it is violated, obviously our trade will be stopped out. Those who have taken trades in both these zones, it is a bad trading day. We have to accept, there is no other choice. But anyway, you will be taking care of your risk when you are planning your trade, because the stop loss will be within your range management level. Risk management level. Because you accepted the risk, obviously the risk is triggered and you have to accept it. Bank Nifty traders, it is a stop loss. Both the trades, it is a stop loss. Any long opportunities, Bank Nifty traders would have got. Bank Nifty traders, you would have got a long trade opportunity here. Because it is a bullish trade, those who are planning the bullish trades, they would have taken a long trade here and it would have given you a very good profit. Maybe you would have exited here or maybe trailing stop loss until here you might have exited somewhere, you might have exited. Those who are bullish in the market, planning a trade. But generally, planning a bullish trade setup near high liquidity zone is also quite risky sometimes. Okay, today it is stopped out. Many times what will happen? This zone will be violated and prices will be reaching up to 15 minutes target. I don't know how many of you dare to take a long trade in this area. Bullish trade setup, you may say bullish trade setup we can take long trades. That's true. But when you have a 5-minute zone, many times these 5-minute zones never allow prices to break this high liquidity area easily. Today it happened, it is a different story. There are times such kind of things will happen, but remaining times this 5-minute zone will be violated and prices will reach up to 15 minutes. After that again prices will push. At the time this 5-minute zone will be violated, high liquidity zone. But today it happened in a reverse way. That's why I am not sure how many of you would have dared to take this long trade, knowing that there is a high liquidity zone here. If anybody would have taken a long trade, it's a lucky day for you. Because many times these kind of zones won't be violated easily. That's why I am saying it is a lucky trade. And it is a stopped out trade. Because sometimes these high liquidity zones will be violated. See, such kind of zones, high liquidity, sometimes it is very difficult to predict such kind of violations. Definitely you have to accept our stop loss. Every time if you are thinking these zones will be violated and if you don't take trades, you would not have got so many trade opportunities what we discussed in the previous sessions. See how many profits we got from these high liquidity zones previously. Several profits we got. But today is a unlucky day. So today analysis worked against our plan. So we have to accept there is no other option. And these kind of failures will be less compared to that successful trades you are getting. That's why when the zone is failed, you have to accept this stop loss. Then again you have to move on. Because today it is failed, next time again when you get an opportunity, if you are thinking it will fail, that day the zone is giving you some 200 or 300 points profit it is giving. Risk you have to take. Without risk, in supply demand zone price action, trade management is not possible. You have to accept the risk. So this is about Nifty and Bank Nifty. Now let's move on to the high liquidity zones. Yesterday we identified only one high liquidity zone in Navin Fluorine. We have a daily zone. We have a rally, 2 base candles and a drop candle. And this high liquidity zone is having again a 75 minutes high liquidity zone. The daily high liquidity supply zone is having a confluence with 75 minute zone confluence. That 75 minute zone is also a high liquidity supply zone. Earlier our software has listed this 75 minute zone is also a high liquidity supply zone. So let us go to the 75 minutes time frame. See here you have a base candles and again a drop candle. This is the 75 minute zone we have dropped. Earlier prices came to this zone and came down, again came to this zone, came down. But at the time we didn't have a fine-tuned 15 minute zone. But recently you see here, there is a drop candle, 2 base candles, again a drop candle, LOTL. A new 75 minute zone within 75 minutes high liquidity supply zone. That is what happens in high liquidity area. A new zones will be created again and again. So that's why this is also a confirmation that this is a strong high liquidity zone area. But earlier fine-tuned, when we fine-tuned with 15 minutes, we found a 15 minute zone This is a drop, 2 base candles and a drop. The 15-minute zone we have drawn, but when we went to 5 minutes, we didn't find proper 5-minute structures earlier. See here, the 5-minute structure is not at all good in this area. Mostly such kind of zones will be violated. But what happened? A dynamic zone was created during the last trading session. That is Tuesday. The last session we discussed about dynamic zones. We have a ERC candle, leg candle, we have a base candle, we have a drop candle. Excellent 5-minute zone was created dynamically during the live market, but that day prices did not enter into this zone. That is the only thing happened. Okay, now it is no more a dynamic zone because the trading day is completed, and this is the historic data, and this is a valid fine-tuned 5-minute zone inside the 15-minute zone. This 15-minute zone is inside 75 minutes high liquidity zone. 75 minutes high liquidity zone is again inside the daily high liquidity zone. This is the daily high liquidity zone. So now we are planning a trade in this area. This was our trade plan. This is a leg in ERC candle, base candle, drop candle. But unfortunately today prices did not enter into this area. See today's price action. Prices didn't enter, we didn't get a trade. Again we have to wait for this. Maybe next time again our software list this particular stock. That day if prices enter into this area, you can plan a trade. But today we didn't get the entry. So this is how we fine-tuned Navin Florin. Finally we found a fine-tuned 5 minutes area in the Navin Florin. Earlier we thought this zone will be violated, but it didn't happen. See, sometimes institutions are very clever. The zone we thought it didn't fail. The reason is institutions finally created a new fine-tuned 5 minutes area. So this is about today's analysis. Hope this information will be helpful to you. Let us all meet again in our next video. Thank you.